excited to hear about this next chapter from there, because after you went to Golden Gate, you went and got an MBA at one of the best business schools in the world, Wharton, and then from there did a number of very interesting internships, including at Apollo, where you were working specifically in climate PE. And so let's talk about that next chapter here. And so after a couple of years at Golden Gate, like you chose to go to Wharton, what were you trying to achieve by going to business school? Because just to give a little more context here, like in consulting, like you learned a lot of the soft skills, and private equity, you learned a lot of the hard skills. And so like what gap was there left for business school to fill?
I think it's this age-old debate of once you've built a skill set, the question is where do you apply it? And so I had spent and been very, very motivated and almost maniacal about spending the first handful of years of my career working with what I thought were the best people in the industries that I was excited about and building a skill set that would be valuable in this industry, that would, make sure that whatever I choose to apply that skill set to in the future, make sure that it was as successful as it possibly could be. And so that's where sort of the banking, the consulting, the private equity associate role comes into play big time, is you learn so many things and you just put in so many hours that you feel like you have the ability to apply those things to whatever you want to do in the future. And I'd always thought that way, but then you get to that last part of the question, which is whatever I want to do in the future. That's not an easy question to answer. And it's a question that people spend basically a lot of times their entire lives trying to figure out what they want to do. And so part of the rationale was, let me go to business school. I can take a step away from working or spending all of my time basically working, and take a very thoughtful approach to how do I answer that question. Mm-hmm. And so I like the investing space. I knew a few things. Like I liked business. I wanted to be in that area. I felt like my mind was just geared that way, and I sort of enjoyed that process. But you'll learn pretty quickly that like investing is a broad term. You can work in a variety of different types of asset classes. There's a variety of different types of strategies. There's a variety of different types of industries. And so what I wanted to do in business school was figure out and narrow in on what of those sort of three vectors I wanted to dedicate my life to. And so part of that was obviously the community. Business school, as everyone will tell you, is from a professional network standpoint, one of the best places to be. You don't really get an opportunity at that stage in your career to meet and make 800 friends, plus have alumni of a business school like Wharton, where part of that was also you get a chance to be a little bit of a free agent. You have a .edu email address. You can reach back out to a bunch of companies, and you can kind of be a little bit provocative in the questions that you ask, because you're asking it for your own needs. You're not just trying to get a job anywhere, any shape or form. And so spent all of my time, my 2 years kind of doing that. That maybe is a nice transition into the Apollo job, which is why, so part of the reason that I decided to go with Apollo is because it was different across a bunch of different vectors from what I had done in investing prior. One is that it was a mega fund versus a sort of middle market fund like Golden Gate. They had a major fund size. They were targeting, investing in businesses that were much, much larger than what Golden Gate was investing in. And so that was one element that I wanted to just see what the universe of mega funds were like. Everyone sort of touted mega funds as the best thing in the world. And I was like, let me go see that to figure it out and believe it. I've always been the kind of person where I'm like, if people say it's a certain way, I either need to go prove it or I don't believe it right off the bat because I want to do something different. The second thing with Apollo is that you mentioned this, but it was climate investing, which was a little bit more a year ago, an interesting and hot space. And I was like, oh, why is it hot? Like, why is it interesting? Why are people excited? What does climate investing really mean? And then the third thing is Apollo has been known in the industry to be a very deep value oriented investing firm, meaning they care a lot about buying almost displaced assets at a very, very cheap price and making a lot of their money on the delta between their ability to buy businesses that are floundering a little bit and then turn them around and make them better and then put a bunch of complex structure in the transaction to make it work. And I was like, I've never really seen that before. It'd be kind of fascinating to go learn how people think about investing from that standpoint. So got to do that over the summer and learned a lot of things. And then I think, I'm happy to get into the details there, but that was the sort of impetus for going to business school was, hey, I've got these different things that I want to go test out and learn about my career. And how do I make a decision on what's long-term?
Well, let's follow this thread on Apollo because you gave us a nice table of contents here, talking about some of the things that were different, like the mega fund versus the climate fund investing versus the deep value side of things. And so, what was the takeaway? You went and you worked at a fund that had, I think, Apollo raised like a $20 billion fund or something ridiculous back in 2023. You're working in climate, which
Yep.
I'd argue is still probably one of the most competitive places to place in private equity because it's very sexy for a lot of students. Like they want to do good while also investing, and therefore that intersection is really, really hard to get a job. And then the value side of things, like what did you like, what didn't you like, what did you learn from these three things?
Yeah. So overall, I realized I did not like the space, and I got a return offer, decided not to go back for that reason. Um, there's a few things. One, on the mega fund side of things, there's been a big shift in the private equity landscape, I'd say, over the last decade or so, where there's been a huge influx of capital. And what all of that capital coming into the industry has done, at least in my opinion, is it's created a huge amount of competitive tension for assets.
Mm-hmm.
And it makes the companies, the operators, so much more valuable. If you're a high quality business today, you can get capital from anywhere, and everyone's fighting to be the person that's going to give you capital.
Yep.
And so you have all the power in the relationship. And so what that means is that the private equity firms have had to think a little bit about, how do I differentiate myself and figure out my own unique and individual strategy. So for the mega funds, and this was very apparent at Apollo, what they've decided is they've become purely asset generators. So their goal is to grow their assets under management as large as they possibly can. And for those that don't know, the way that they get funded or they get money is they get a fee off of the assets under management that they have.
Yeah.
And so what they decided is, we're just going to increase the size of our assets under management substantially. We're going to clip a 2% fee off of a large base. And we're going to make a ton of money for the rest of our lives. And we can deploy that capital at lower and lower returns at higher and higher prices for businesses. But we're okay with that because all we care about is the AUM fee that we're getting. And while that is very thoughtful and smart, and the people there are extremely thoughtful in this, for me as someone that's trying to build a career in that industry, I don't get a ton of the advantage. The people who get the advantage are the partners. They're the ones that are there. They've built their careers. They're going to clip their 2% coupon for the rest of eternity, and they're going to be very wealthy and rich. For a VP or someone that's trying to build a career, you have no room for growth. So
Yeah.
that was one.
Wow. That's
two.
That's a good zinger there. I love it.
It's my hot take. But you see it play out a little bit, with folks getting stuck in the middle. Number two, climate. Frankly, climate investing at Apollo felt a little bit like, to your point earlier, oil and gas investing, but with a subset of it had to make an impact on some sort of sustainable business activity. Really, all it was the same Apollo sort of investing process, but with a subset of businesses that actually fit the climate category. I found that interesting, actually. I think it's a really great space, and I think it's fun to work with these companies that are sort of pushing the edge of what's happening in climate. A lot of it was more so reducing emissions more than it was like actual climate investing. But like from a private equity standpoint, fascinating. I like the space. I don't think that was a negative factor. And then third, on the deep value side of things, when you're looking at spending a lot of time on businesses that maybe aren't the most high quality asset in the space because you're trying to pay basically a C price for a B asset. The tough part is you really need to be super smart about all the downside cases. We talked about stress testing at length earlier.
Yep.
That is a million times more important when you're looking at a business that has fundamental challenges.
Yeah.
For example, customer concentration or exposure to cyclicality or something like that. You need to be an absolute expert in the industry in order to make sure that you are bounding the downside as much as you can, or creating some sort of structural dynamic where you're doing that. And so to bring it back to the role itself, that means that you're spending a lot of time on bad corner case scenarios. And as an investor, like, that's not something that I was excited about. I want to talk about growth. I want to talk about where this business is going to be in the future, where this industry is going to be in the future. I don't want to talk about like a bunch of like, why is this going to potentially fall apart and how do we prevent that? And so I just sort of learned those things about myself. That doesn't mean it's not a fascinating place to be, but realized that it wasn't right.
Yeah, no, that's totally fair, and I think everyone has to go and experiment a little bit to get those ideas because you're just not going to know unless you try. And as much as you do networking calls, like I'm sure you talked with people at Apollo, I'm sure you asked them if they liked it, I'm sure you like did your diligence. You just kind of sometimes have to get into the feel of it, which is going back to the business school thing. One of the reasons why I am such a big fan of the business school concept is because it gives you a couple of chances prior to a sort of a reset point where like you're able to try banking, you're able to try consulting, you're able to try one type of private equity, and then you can go do an internship, and then you just kind of get a big reset card where you're able to say, okay, like I'm a little older now. I'm not just like 22 straight out of school. Like I've had some experience. I've tried some things in the workplace. Like what do I want to do? And so in some ways that's a luxury that a lot of people just don't have, is like that chance to like reset and direct towards an area that they're excited about. But when used intentionally, it can be extraordinarily powerful. And so we're going to come back to that, and we've obviously got to talk about where you've chosen to point yourself post school. But let's return to the school side of things a little bit. So you went to Wharton again, which again, perhaps one of the best business schools on the face of the planet. You know, I went to Stanford, so I'm not going to get into that debate too much here. But
I was going to say
realistically,
that's got to hurt you to say.
yeah, no ego here. I will admit it's an incredible school, and so how did business school change the way you think? And the reason I'm asking this is because like we talked about consulting and the way that like it shaped the way that you communicate with people. We talked about private equity and the way that it changed the way that you're able to like financially model and like build out financial fluency. And so, what was sort of the thinking skill set that you gained through business school?
This may sound bad, but it gave me business school is about getting a lot of confidence because I had spent the last 4 years leading up to business school working in industries where everyone around me I thought was so much better than me that I was like, oh, like I've got to be like average at best, maybe a little bit less than average because everyone around me is so good and I learned so much from them and they are like really, really high quality around me. I hate to lead into this too much, but I think business school was a little bit of the opposite dynamic. And again, not to be disparaging in any way, shape, or form, but I think in a weird way, it was comforting and eye opening to see that I was comfortable with a lot of things that people found very, very challenging in the business ecosystem.
Mm-hmm.
And it was a validation of dedicating hours and hours in the first 4 years of my career to pushing myself to learn the most I possibly could. And so what that does in a lot of ways is give me the ability to say, hey, like actually there's a lot of people that, I think that I'm probably in the upper 10% or 20%, 20th percentile echelon for me to go out and do something for myself and be successful. There's a lot of people in this category that go to business school. And by the way, like, as you mentioned it, Wharton's a great business school, so many smart people, but I still think I was like, I had a little bit of an edge. And I was like, oh, if I have an edge here, I've got to have an edge in the real world when I go do something myself.
Yeah.
And so that's where the little bit of the impetus of like starting and maybe trying a more risky career where I bet on myself a little bit felt a lot more like a viable path in the future. So yeah.
Mm-hmm. Yeah, no, that's totally fair, and that's a funny answer. I'm gonna push on it slightly though, because I had in some
Please.
ways a parallel experience where I had this PE background. I showed up at business school, and I realized, wait a second, like I'm actually pretty good at a lot of these like technical finance concepts and like thinking about businesses. And so in some ways, like I hear you. Like I was like, yeah, actually, I think I'm probably above average in terms of some of these like data analytical skills and in terms of like the interacting with management teams. But what I realized very quickly about my classmates is that everyone was there for a reason. Like everyone there had
True.
been excellent in something, and like whether that was the guy sitting next to me who was like an NFL quarterback, or the person who had like created like a movie studio, or someone who had like led the largest like non-educational nonprofit for like coding or something like that. Like there's so many different ways of excellence, and it was kind of fun to me to see that like, okay, yeah, like actually I have carved out a niche that is unique and that is extraordinarily valuable. And I'm not universally like I can't go
Totally.
and teach an education nonprofit, but I can do some of these other things really, really well. And that was kind of funny. It reminds me of what you were saying earlier, where like you didn't learn how much you learned until you were a second year associate, and the first year associates were asking you different questions. And you're like, wait a second, like I actually kind of know this. And so that was it was kind of a fun experience for me too, to like be like, wait a second, like I kind of know finance a little bit. It's fun.
Yeah. No, great point. And I think, yeah, I think the way that I framed it was maybe a little bit too short sighted. I completely agree with you. And one thing that I've also learned that couches a little bit in this conversation is as you think about the future of your career, I think a lot of people, especially early on in your career, focus a lot on your weaknesses. They're like, oh, you're not good at this, you're not good at that. Let's work on trying to bring those up and make those better. What I've learned is actually like, yes, you don't want to have major gaps and major weaknesses. That's important. You need to make sure that that's covered. But you don't need to make a weakness a strength. What you need to figure out is what you spike on and what you're really, really good at, and then lean into that extremely heavily. Those are the people that end up doing extremely well in the long run. And to exactly what you were saying, business school is a great way to identify what that spike was across a group of people that were completely different, had spiked on very, very different things. And so it allowed me to figure out, hey, I spike on this specific segment of the industry and business that I can go and do differentially better in, and give me a little bit of the confidence to go do really well in that category. So something to keep in mind for a lot of folks as they're thinking about their careers. What do you find that you're like really, really good at, better, like you can do the top 1% at in the entire world, and then just go do that to the best of your abilities, and I guarantee that will lead to success.
Preach. I love it. It reminds me of there's a famous professor at Stanford named Graham Weaver who founded Alpine Investors, which is like an incredibly successful PE firm. And he has this saying in his classes that he's like, you gotta pull your weeds and water your flowers. And I think a lot of people, myself included, have spent most of my life pulling weeds. I'm like, I gotta weed my garden, get rid of these strengths or these weaknesses, these things that I'm really crappy at. And then hearing him say that, like, kind of flipped a switch. And I was like, wait a second, like, there's some things I'm really good at. Like, what would it look like if I just chased those? And I didn't just, spend all day pulling weeds, and I got to do the fun stuff and like the things that I'm really good at and spike at. And to some extent, that's why I'm here with Wall Street Mastermind, is because I realized I love coaching. I really, really love helping people break into finance careers. It's something I'm good at. Like it comes to me like to be able to share some of the things I've learned in a way that's digestible for others. And so for me, I said, wait a second, I could just be watering my flowers. And instead of pulling weeds and trying to get incrementally better at deferred tax asset modeling so I could do a better deal in a mid-market private equity firm or something like that. And of course, I'd love to do that, but I get the sense that I'm going to be able to help so many more people in a very different way through Wall Street Mastermind and helping them break into these careers. And it's just, I hope, going to be a lot more fun in the process. So, but circling back to the business school conversation one more time, because like a lot of people in our shoes a few years ago, where they're in investment banking or private equity, and they're not sure if they should go, because they don't have to go a lot of the times. And a lot of students these days realistically can get promoted directly without going to business school. Like, would you even recommend that it's worth the investment? Like, what's the draw, or is it not worth it?
I'm going to give you a classic consulting answer. It depends on a lot of things that are unique to every individual. Here's what I'll say. I think it's very, very easy to accurately assess the negatives of going to business school. It's a lot of money, which is very true. It is a lot of money. Mm-hmm. And you're out of the industry and being a professional for a long time. And it's really, really hard to replicate actual working years. Right. So those are two very, very big costs. But I think we can all sort of get a good concept of what that downside or that the bad part of it is. That said, my personal strong recommendation is that I think most folks should go, because it is an opportunity that I think is almost once in a lifetime in one way, shape, or form. Because I think a lot of people highly undervalue the positives associated with it. Everyone says you get a professional network, you get a bunch of free time, you learn a bunch of stuff in classrooms again, which is all good. But I came away with, I'd say, 8 to 10 people that I will call my close friends for the rest of my life, and memories over a 2-year period when I'm like 26 to 28, where I will never, ever forget those memories for the rest of my life. Going traveling to different countries, exploring the world, doing the things that make, candidly, life so exciting and worth living, and why we work all these hard jobs at the end of the day is for a reason to go enjoy life. And so that to me is truly priceless. And so it's hard for me to see an environment, looking back, at least for me individually, where I would trade off the negatives, even if the negatives got worse, for the experience that I have. So if you're looking for something like that, it is so, so valuable. Do I think, and I'd be curious to get your take, because you obviously did it as well, and everyone has their own sort of unique path. But I feel like I heard people say that, and it didn't really like land with me, because I was like, I don't know if I'm going to have that experience. And maybe you don't always have that experience necessarily, and that's okay. But I do think taking a step away where you can understand, what do you actually care about in life when you're not working all the time is so important as you think about the next 40 years of your career. It's a little bit of like a long-term vision thing that you can't really conceptualize in your first couple of years. So in most cases, I think most people are biased against it. I would sort of push for it, but there are still some downsides to consider.
It's funny to hear you say that, Ashish, because I really agree with the way that you frame that, where the downsides are immediate, present, visible, obvious. The upsides
Yep.
aren't. And so it's like, yeah, sure. Are you going to make some friends? Like maybe, like who knows? Like, is that going to happen? Are you going to get some new job opportunities? Like, sure, maybe. Like, who knows? And so it's like very nebulous. I can talk with anyone all day long about how those things did happen for me and how I was able to like dramatically increase my earning potential and make incredible connections and learn and grow as a person in so many different ways. But I'm going to push you on one thing because you said it was priceless to go to business school. I'm going to push you. How much would you pay in dollars to go to business school?
Well, I essentially paid $1 million. So let's let's couch this as that the baseline. Um, Am I assuming this is a very financy question? Am I assuming max loan capacity and I can just get as much money as much money as I want
at a reasonable rate? It's just you're going to have to pay.
I would double that. I said priceless, and I appreciate you pushing on it. I would double that. I would go $2 million.
So Ashish would pay $2
And
million
here's the reason.
to go to Wharton. We got to tell them.
I would pay $2 million. Yeah, so I was being careful. I've already done it, so they can't take the money from me now, so I'm all right. But sorry for future Wharton people if that bumps your tuition. But here's I'm already seeing it today, and we should talk about this in a little bit. But like, you're already seeing the value of like the relationships, partnering with business partners, getting access to new jobs. People literally will be your investors in a fund if you want to go raise a fund in the future. Like, maybe like I'd say 2 million because I'm capping my sort of number and my loan capacity and like how comfortable I would be with that much and out in debt. But other than that, like I think the value is tremendous and it's going to compound only more over time.
Yeah. That's funny. And, I was just thinking through the number in my head as well. Like, I probably would be somewhere in that range, if not a little bit more, just because I do believe in those intangible upsides. And the reason I decided to go to business school, because like I built out a financial model for the next like 75 years, because I was about 25 when I was applying, and I said, hey, I want to live to 100. Like, what is my net worth at death going to be? And I modeled out, okay, like I'm going to go to business school. I'm going to lose the income. I'm going to pay this massive amount of cash up front. And I modeled that by the time I died, I was going to be 33% lower on my net worth. Like literally 33% of my net worth just gone by going to business school. But I still went because I talked to dozens of people. I did tons of networking calls, and every single one of them had a positive NPS. And so I was like, either everyone here is getting conned into this like random MLM, like this mass marketing pyramid scheme trying to get people to go to business school, or there's actually something here. And in retrospect, like I'm really glad I did it, and I'm happy to propagate the MLM, the pyramid scheme. Just know that I will get a cut if you do go to Stanford. So just kidding.